Asia-Pacific markets are mixed this morning as investors are digesting Japan's inflation data. Prices in Japan rose 2.2% in June compared to a year ago, in line with analyst expectations. According to investors, though, inflation is likely to accelerate again in the coming months, but the central bank is likely to stay accommodative since inflation is not demand-driven. Yesterday, the bank kept rates on ultra-low levels. Meanwhile, the European Central Bank has raised rates more than expected on Thursday, with ECB President Christine Lagarde warning that inflation risk had intensified.
Economic activity is slowing. Russia's unjustified aggression towards Ukraine is an ongoing drag on growth. The impact of high inflation on purchasing power, continuous supply constraints, and higher uncertainty are having a dampening effect on the economy. Firms continue to face higher costs and disruptions in their supply chains, although there are tentative signs that some of the supply bottlenecks are easing.
Let's try and make sense of all of this now with Danni Hewson in Huddersfield. She is a financial analyst at AJ Bell. Danni, many thanks for being with us this morning. So we've seen it. I mean, inflation in Japan, yes, it's lower than it is in Europe at the moment and elsewhere, but it is above the Bank of Japan's target. So do you think the Bank of Japan is going to continue with this ultra-low policy? And if yes, why?
Yes, I mean, it's been 3 straight months that the inflation rate has been above the bank's target. But the bank does look set to continue because when you take a look at the way that consumers are behaving, the price rises have become before wage hikes, which means that consumers are already thinking carefully about what they spend. And there is some indication that perhaps inflation in Japan has reached its peak. But of course, there's so much volatility around, particularly when it comes to both food and energy prices, that there are big concerns that maybe the inflation target that the bank has set won't be reached for many months to come. And as you say, you know, Japan's inflation is far below that being experienced in places like Turkey and the UK at the moment, but it is still impacting consumers. And the bank will need to keep a careful eye on those prices going forward.
Interesting, Danni, that it might be at peak in Japan. And speaking a little bit about Europe, I mean, was the ECB move effective, in your opinion, 50 basis points? Or what do you expect them to do in September?
Well, the ECB has said that they will now look very carefully at inflation and that the anticipation is that they will continue to increase rates. As you say, you know, it's been 11 years since we've had a rate hike in Europe, and lots of people believe that this rate hike has just come far too late to make any real difference to the situation of the economy in Europe. Of course, you know, you've got to remember that the European Union is a massive place, and what might be good for one country might not necessarily be so good for another country, which is why, of course, they've implemented this bond buying program, which can come in to cap the amount of borrowing in places like Italy, which, of course, have 150% of GDP in terms of their debt. So I think it is a start. I think we saw, obviously, the euro strengthen against the dollar, and that has been a particular concern. But yes, even though I think rates will continue to climb, it's probably not going to be enough to stave off any kind of recession.
Danni Hewson, many thanks for your update.